welcome to our third podcast. I know we had Adrian Hammond about 6 months ago talking about PGMs, but that was $600 ago with platinum pricing. You are head of research at the WPIC. You're super plugged into the market. And I think a lot has changed versus 6 months ago regarding China. It's got there is a bigger footprint from them. Retail has now subscribed to precious metals, and the investment story has really sort of ramped up. So we'll get to all those three topics, but I guess, just welcome to the pod, and we're happy that you're here.
Oh, thank you. Thanks for the invitation.
You've been in New York for, a couple days now, and so I think a good starting point would obviously be just, what's the tone and sentiment on the ground? You've spoken to a ton of investors, I'm sure, but, what's the feeling here with platinum already up? I think it's up 80% year to date. Yes, what are the key themes and takeaways from your trip?
Yeah, I think we're up about 84% now. Yeah, look, I mean, I think the sentiment is overall, actually pretty constructive still.
Right.
Still pretty positive. When you talk to people who are actually in the weeds and trading the physical metal, there's still clearly, quite a shortage of metal in the prompt market.
Right.
And so, to a degree, that's just helping the kind of enthusiasm, I guess.
Mm-hmm.
Ultimately, we have had a really strong rally, and rallies don't last forever. So the right questions are being asked. But if you think about it, we've had on our numbers 2.5 years of deep and sustained deficits in the platinum market of kind of plus minus 900,000 ounces out of a total market of around 8 million ounces.
Right.
And so commodity market economics 101, how do you solve for deficit? And usually it's price. Yeah. So the price moves higher until you disincentivize demand, or you incentivize new supply to the market. And we just haven't seen that happen.
Mm-hmm.
The $700 price increase since May
right.
hasn't fixed things really, or $750 plus.
Right.
Yeah, I think you've still got strong tightness in the prompt market with heavy backwardation in the London OTC market. Yeah. And obviously elevated lease rates.
Yeah, so there's a ton to unpack there, but let's start with demand and why has this year been different? Like you said, I think there has been a lot of frustration amongst investors where you said you've had deficit numbers for 2.5 years. Other sort of research houses have had deficit numbers for 10 years and the prices has fallen. So why this year? What was the catalyst to change that? The fact that now we're seeing price rising in a deficit market, which we should have seen.
So I think, probably taking a step back and asking why didn't the price move earlier?
Right.
And fundamentally, it's because above ground stocks were adequate to balance the market. Mm-hmm. So the availability of those above ground stocks has obviously been depleted as those deficits have eaten into them. And in reality, I think, if you think about those lease rates and the backwardation in the OTC market, that began to emerge from late November, early December last year, and persisted without the price having actually moved until May. And so, I think effectively what's happened is those above ground stocks, which are very hard to estimate, and people are
very hard.
So there's a high degree of uncertainty as to how large they are. They just simply became depleted to a point where there wasn't adequate metal, the prices that we had then, to keep the flow of those above ground stocks coming into the market to balance it.
Right. So we get to a point where we've kind of drawn down above ground stocks to a level where you're going to see that play out in the physical indicators, which we've seen sort of in lease rates and the forward curves and sort of sponge levels. Who's been in the driving seat? Has it been industrial or investment demand the last 6 months?
I mean, for the last 6 months, I think it's been a combination really of jewelry and investment demand.
Yeah.
For sure. So, we haven't really seen major changes in automotive or industrial demand at all. But that said, we measure demand based upon when we estimate people need to use the metal. It's not necessarily when they're purchasing it. So
yeah, no nuances there for sure. Jewelry, I mean, that just, my mind automatically goes to China. You are so plugged in with China, the WPIC sort of lead runner of, their major Shanghai Platinum Week. It has been the talk of a Platinum Week, that conversion from gold into platinum. So I look at Chinese imports, and the trend year to date has been, it's been kind of average versus, so, we got the story, but the numbers aren't squaring with the story. So what's going on in the ground there? On the ground there, is it investment? Is it jewelry? Is it a restocking cycle? Where they sourcing from? Again, China is if you can solve for China, you can solve for markets.
yeah. So look, I mean, I think on the imports, you're absolutely right. It's a pretty robust year. It's just not meteoric. And I think back in May, everyone got really excited about one number that came out regarding imports in April being, I think there were some press headlines saying record imports, whereas that...
When numbers not a trend, right? Yeah.
But at the same time, and actually I do think in some ways this is the catalyst that really kind of started the price moving. There was the combination of those imports plus the discovery that we were seeing kind of an inflection point in jewelry demand in China. And so, China used to be, back in 2014, it was a 2 million ounce a year jewelry market. So huge, really important. And that just shrank over 10 years to a low sort of watermark of just over 400,000 ounces in 2023. But in Q2, jewelry demand basically doubled quarter on quarter. And so did investment demand in China as well, actually. And so just the kind of discovery that was the trend that was happening, I think, was quite a big catalyst for the market. We remain perhaps a little bit cautious. We think that what's driving that growth is largely falling gold sales. So gold jewelry sales in China were down 32% in Q1, something similar to that. I can't remember the exact number for Q2 as well. And so what we're seeing is that the wholesalers are trying to compensate for falling gold jewelry sales by offering their customers an alternative that's lower cost and trying to get them back in through the door and spending money again.
Right.
And so they've really focused on platinum because it's not such a big silver market in China. And so they've sold out of their gold holdings, actually quite profitably because gold prices have been going up.
Yeah.
And
it's been a good trade for the wholesalers in China, for sure.
and then pivoted to platinum. So we've seen a whole load of new showrooms open up in Shenzhen, which is the center of the wholesale jewelry market in China, that have been stocked with platinum jewelry. And that kind of inventorying of those showrooms and then that spreading out to the actual retail showrooms in the regions, I think has been the biggest factor so far in seeing in that inflection point in Chinese jewelry demand. Where we remain cautious is that we haven't worked out yet where to find the data to demonstrate if that's translating into true retail buying.
Right. Has the consumer showed up?
Exactly.
Is the sort of magical question. And I think the market is keenly looking to, I guess, the rest of this year and maybe early next year to see whether the Chinese consumer sort of re-engages what the wholesale market is essentially telling us.
Exactly. And I think Chinese Golden Week just ended, sort of really important national holidays and important for second really to Chinese New Year in terms of jewelry purchases. And so hopefully now our colleagues in Shanghai are back at their desks. We should be able to get a few more insight.
Okay, certainly look forward to that. Sort of the flip side of jewelry and investment. I'm going back to investment a little bit. I mean, do you get a sense that institutional investors are overinvested? It's frothy. There's perhaps exit risks here. Platinum and palladium are historically more niche, more illiquid than gold. And you look at precious metals as just collectively up between 70 and 90% year to date. I mean, it's berserk. So, how sticky is investment demand that has recently entered? Yeah, and how do you read it in terms of the sort of market structure risks?
Yeah, so I guess before kind of getting on specifically to platinum, I think it's worth probably thinking about what's supporting the whole of the precious metal complex at the moment. And particularly gold, and I think it's a rising tide that's floating all ships here. And to a degree, these are commodities that are priced internationally in US dollars, and we're seeing a policy landscape in the US potentially could lead to dollar weakness. That's obviously exacerbated by the fact we've entered a rate cutting cycle in the US, and there's relatively weak jobs data that may accelerate that. I know there's obviously quite a big debate going on about and the latest FOMC comments were actually perhaps a bit more hawkish than people were expecting. But overall, I think the trend is potentially for US dollar weakness, and so that in dollar terms means all commodity prices. Yeah,
it's a debasement trade that is in its early innings, and certainly from that perspective, I think precious metals and certainly your sort of smaller niche ones like PGMs have a lot of upside.
Yeah, and I think added to that a kind of a de-dollarization trend that's been ongoing for a while, but has really accelerated since arguably November last year. And so if you look at central bank holdings, for example, gold holdings by central banks have just overtaken treasuries for the first time since the early 90s. Partially price related, obviously.
Right.
But I think beyond that, we've seen a number of the kind of large asset managers talking about transitioning their portfolio structures from a sort of 60-40 equity bond mix to 60-20-20, and that other 20% is gold.
Precious metals, all precious. Yeah.
There isn't enough gold around to accommodate that. So you will see contagion from gold into the other precious metals.
I'm certainly aligned with that. And platinum more than palladium sort of owns the overflow from gold, as you will. So let's talk about supply response. I look at it like that you have three levers, right? As primary, secondary, or current holdings, and talk about maybe why the first two aren't responding, but the fact that we've got the metal there. We can see it. We got 3 million ounces in ETFs. We've got 700,000 ounces in COMEX. And you've got a incredibly tight London market, yet the metal is not moving to where it should be. So, in me, it's sort of a metals 101, metal always flows in precious metals, particularly pretty quickly, to where it's best treated. And so why isn't COMEX 1 and ETF holdings flowing to where it's actually needed in London?
Yeah. Okay. Well, so I guess addressing that last question first and then going back to primary and supply and recycling. I think the problem is you've got a non-zero risk of tariffs being applied to critical minerals, including platinum and palladium here. And so if you look at the shape, if you look at the delta between the NYMEX forward curve, which is in strong contango, and the OTC market in London, which is in backwardation, you're pricing in something like a 10 to 15% tariff. That's probably risk adjusted down from a higher level. And so I think there's a fear factor here that's resulted in onshoring of platinum and palladium. And platinum, you can kind of see that quite clearly because a lot of people choose to lodge it on the CME. And so those holdings that you mentioned are sort of 700,000 ounces. How much could come out of that? Potentially 500, 550,000 ounces. That could then go to London and be put to work in the leasing market, for example. But the problem is I think there's a fear that if you take that metal out of the US, you might pay quite a premium in the future to bring it back in. So
given the policy uncertainty or just inherent tariff policy uncertainty.
Exactly. And also it's worth noting that 550,000 ounces doesn't solve the deficit that we forecast for this year, which is 850,000 ounces. So it would definitely ease the market tightness a bit. You would probably see lease rates come off and some normalization in the forward curve in London, obviously, but it doesn't fix the tightness. So then you kind of come to those 3.2 million ounces of ETFs. And we did see a bit of profit taking earlier in the year, but now over the last week or two, we've actually seen additions to ETF holdings. And I think, again, kind of going back to the contagion aspect, there's been strong buying in the gold and silver ETFs, and I think it's just cascading down to platinum as well.
That makes sense.
And given, I'd add that there's a kind of consensus view, I think, that platinum is in a deficit for potentially the foreseeable future. So from a psychology perspective of the holders of those ETFs, where do they see value? Where would they start to think, hey, I've got to crystallize this now? And then also, if you do that, where do you put that money to work afterwards?
It brings in a question which I've asked, but how does the end consumer deal with lease rates sitting at 40%, just has come back down to sort of 10 to 15% in terms of leasing out metal versus purchasing outright? How do you think about that? Do you think that is happening on top of obviously investment inflows, or do you think that consumer is somewhat a little more sticky in terms of preferring to enter the market through leasing metal versus outright buying?
I found it quite amazing. We haven't seen a change in behaviour so far because, like the 3-month lease rate, for example, peaked at, I think, 36, 37% before your credit spread.
Before.
Which is just incredibly expensive. So surely take a bit of price risk on, and you could borrow in dollars and for a much lower rate, buy the metal. You could hedge that price risk if you chose to, but for some reason there hasn't been a wholesale change in behaviour so far. And I think you've got to worry because the overnight leasing market is actually quite substantial in terms of volumes. If you think about the amount of metal that's potentially being leased at any one given time, including the fact that you've got internal recycling and industrial applications, it's potentially 4 to 5 million ounces. And so what happens if someone goes into the market to try and borrow metal because they need it and they've always done this, and then it's just not there? I don't know. I think there probably does need to be some change in behaviour towards outright ownership, but I don't know if that's really happening at scale as yet.
Certainly inject another tailwind into sort of underlying pricing.
Potentially, yeah. But I suppose in theory,
it'll alleviate lease rates. It'll become a rebalancing. So let's go back to my 5 questions in one about supply response, but I think it'll be good to revisit why primary perhaps can't respond as quickly and all scrap. So we talked about the sort of above ground holdings, but
So look, in terms of primary mine supply, that's for the most part, we're talking about deep level underground mines in South Africa and in Russia. And the type of mining is just inherently inflexible. We've had over the last 5 years with restructurings and the fact that the basket price for the PGMs has been pretty depressed. We've seen about 500,000 ounces in platinum terms come out of primary mine supply. Now, in theory, that means there are some shafts that are mothballed that could be reopened. There are potentially some of those marginal operations that might be restarted. But in all honesty, are going to be able to flex up at all quickly. There's probably a year plus time frame to try and get those back into action. And at the same time, if you're the management teams of these mining companies, how much confidence do you have in the sustainability of prices at current levels to make that commitment right now? And I don't think we're necessarily there yet. And certainly a lot of the rhetoric that seems to have been coming out of them has been about continued capital and supply discipline. So I'm not expecting a meaningful inflection point in primary mine supply, certainly not in the very near or even to the medium term.
Right. And I think, we assume we just look at a platinum price, but you got to look at the Rand PGM basket as a whole and over a longer term. And we're not even near, 2021, 2022 peak. So, yeah, I think, so if we do get up to 2021 peak, sort of Rand PGM basket, would you expect a supply response?
Well, I mean, those record basket prices were due to the high prices of
rhodium.
Rhodium,
Yes.
And over that time period, supply actually declined. So
right.
I mean.
No, good point. And then back to scrap and recycling. I mean, the same old adage, like when are we going to get a recovery year in secondary supply? And it just keeps being pushed out. It seems structural at this point, but how do you read that side of the market?
So I think the secondary supply question is it's been continually pushed out because the economics have actually been really unsupportive of any kind of meaningful supply growth for the last couple of years. So we actually published a report on this fairly recently. If you look at where the economics, if you look at how the supply chain structure for recycling, automotive recycling kind of works, for the smelters and refiners, those are margin businesses and they can hedge their price risk and they make consistent margins through the cycle. But for the scrap yards, scrap aggregators, decanners and so on, they've got high fixed costs, and so lower PGM prices actually really kill their economics, and so that's been suppressing recycling supply for the last couple of years. On our forecasts, we do expect supply to recover going forwards towards your kind of modelled optimal scrappage curve, if you like. So in platinum terms, we've got about, over the next 5 years in our numbers, about 300,000 to 400,000 ounces of recycling supply growth. In palladium, it's I think 800,000 to 900,000 ounces. Now for platinum, these are in our base case assumptions. We've still got sustained deficits of 600 plus thousand ounces a year.
Even accounting for that.
Exactly.
So, wow. Okay.
For palladium, we've got it trending towards the supply demand balance towards a surplus from approximately 2027, 2028. And the interesting thing about that is that actually could become a limiting factor on recycling supply in itself, because palladium and rhodium are actually the bigger drivers of the economics for the scrap industry, not platinum. And so, it could cap those recycling rates, and that would also, cap the platinum recycling as well.
Okay, yeah, makes sense. A little bit back to, we've talked about investor demand, but just on the retail side, WPIC has a load of initiatives. How are you seeing that demand trends in that sector, and especially given the cost of financing? I think it can be an Achilles heel, but yes, we'd love to hear your thoughts in terms of some of the initiatives both in China, the US, Europe. How is the retail investor looking at platinum?
So look, in China, I think probably easier to address there. It's been extremely strong. So there's been definitely a pivot away from, I mean, you probably wouldn't even notice it in the gold market because it's so much bigger. But there's been a pivot towards platinum, possibly away from gold, and it's been really significant. There's been a lot of demand for platinum investment products, and I think quite tellingly, that demand this year has been very much in the smaller bar sizes, so sort of 20 grams or smaller, and so that's very much a kind of retail consumer, retail investor, type area of demand. I would say that with the price having moved higher, there has been a little bit of softening in demand naturally. The Chinese are quite good at picking sort of bottoms in terms of pricing, and their buying tends to buying tends to fade away a bit if price goes higher. But then that's been happening with gold as well. In the rest of the world, it is a bit more challenged because, as you say, those financing costs, the lease rates, have been really elevated. And so for the fabricators of investment products, that's been a bit of a challenge. And so I think, whilst the consumer demand has actually been really good. I mean, anecdotally, I was talking to someone a few weeks ago who, in the US, professional investor, actually institutional investor, but decided he wanted to go and buy some physical platinum.
Oh, yeah.
And he was just struggling to find it. So because there's just unfortunately there's a lack of supply at the moment.
Right. No, absolutely. We haven't touched on auto demand trends, what your outlook is for sort of the EV penetration rates, but just very broadly, into this next decade, how are you reading auto demand growth and the impact on PGMs?
Yeah, so I guess the PGMs, platinum, palladium, and rhodium, are used in the catalytic converters for internal combustion engine vehicles, either pure ICE or ICE hybrids. And so the electrification of the drivetrain is going to be really important for the outlook for the space going forwards. And clearly, I think electrification is going to continue. But our view has generally been for quite a long time that it would happen at a slower pace than I think a lot of people had anticipated. And principally, that divergence in views was really because I think a lot of the autos analysts were looking at it from the point of view of listening to the automotive manufacturers and what their plans were, which were in turn dictated by the fact they had these fleet-wide CO2 reduction targets that they have to hit. And so they were betting collectively, okay, if we maximise our BEV output, then that helps us we hit those targets and we've got more flexibility in the rest of our production lineup.
Right.
But the problem was that consumers actually just weren't buying them in enough volumes. Yeah. So they've had to pivot towards more ICE vehicles, principally hybrids. And so over time, we've seen the kind of autos analysts cut their estimates for market penetration rates for pure BEV vehicles. We haven't really changed ours for about 3 years. Okay. So in terms of a line in the sand, 2030, we globally see pure BEVs at being about just over 28% of the market. 20, okay. And the rest is hybrids or pure ICE. And we see a trend towards overall hybridization over time. Okay. So that's our kind of forecast. Okay, no, that's interesting. And interestingly, we ran a site visit after Shanghai Platinum this week to a major Chinese automaker, and their view was that there would still be up to about 50% of the Chinese market in 10 years' time would still be an ICE vehicle of some description.
Oh, 50-50 in China, right.
Which was actually a lot higher than I was expecting.
Okay, interesting. I know I've seen WPIC get a lot of questions around whether the central banks will buy platinum, but I think it's oversimplified question. I think the question should be, do you see strategic stockpiling of platinum, central banks perhaps included, but amongst sovereigns, amongst sort of more strategic players in the space?
So, I mean, we've been getting an awful lot of questions on this recently. Right. I mean, the answer is we don't know, I'm afraid. Yeah. I mean, I think anecdotally, we've heard of some central banks owning small amounts in the past. Do they still own it? Are more considering it? Platinum isn't on any of the official reserve asset lists. So, it's not necessarily that easy for central banks to hold. I mean, I think, if you look at where it would make the most logical sense, arguably, it would be South Africa to sell a little bit of their gold holdings and buy lower cost platinum, support the domestic mining industry as and employment and things like that, and send a message to other central banks. But I think central bankers are naturally very conservative, and trying to make a switch like that is they're risking quite a lot of their careers, and things like that.
Yeah, no, for sure. But you still get your sort of sovereign wealth fund type allocators in the space. I mean, PIC. So, sort of more strategic. If you do believe there's going to be, this is the world there's ongoing deglobalization. We're talking about regional stockpiles, regional pricing. It makes sense to, as we see in the US. I mean, the US is strategically stockpiling.
Look, I mean, I think it's quite possible. We just haven't seen any evidence of it as yet. If you look at, pretty much every country or region globally has a kind of critical minerals list, and pretty much every single one of those PGMs are on that list. So, it is quite possible that some countries are building strategic reserves. The supply of PGMs is obviously highly geographically concentrated. So 70% of platinum comes from South Africa, 11% from Russia. In terms of palladium, it's about 40% from South Africa and 40% from Russia. And the rest of the world is, not that significant in terms of global supply. So it's for other countries that don't have the geological endowment, accumulating strategic inventories makes sense.
We touched on Section 232, but just generally the policy risk, it's either tariff policy risk, it's the ongoing 232 investigation. There is a PA anti-dumping, palladium anti-dumping investigation ongoing. There's always ongoing Russia sanction risk, right? In your mind, what is the most sensitive, or which one keeps you up at night?
In terms of sanctioning Russian metal, for example, I think sanctioning metals is really quite difficult in practical terms. You can have headlines about it, and governments can say that they're sanctioning it, but I think it still finds its way to the market one way or another.
Right. Correct.
In terms of, I guess, if we look at the US landscape with the Section 232, and as you said, you've got the anti-dumping investigation, which seems to be focused on palladium, but there could be a bit of spillover as well. I would say I see a higher probability of something happening with the anti-dumping investigation than with Section 232. Okay. So with the anti-dumping, the US ITC has already ruled that unfair practices have been followed by Russia, and as a result that some action needs to be taken. Now, they haven't made the decision on the action yet, but it could be either some kind of surcharge or a quota of some description. And the current date set for the first sort of ruling on that is now the 29th of December.
Right, pushed out. Yeah.
But, we've got the government shutdown here. It could be postponed, and actually that would apply to the Section 232
as well.
Conclusions, which were due out in the next couple of weeks. So, I guess in terms of palladium, it's highly likely that some restrictions on international trade, specifically on Russian origin palladium, are going to be coming into place. What does that look like there? Ultimately, I think markets, let's say that, what kind of premium could be applied to Russian origin palladium? If you look at the kind of plaintiffs' documents on this, they're claiming the Russian producers making an 828% margin on this palladium. So that's kind of where you pick your starting point, isn't it? Which would be quite
pretty rich.
Yeah, exactly. So fundamentally, if that happened at that level or anything approaching that, then that metal would no longer be competitive in the US. And so US end users would be looking for alternative sources. Those are available ultimately, but maybe we're already in contractual commitments of some description. So it's going to cause a fair bit of disruption in the near term that could take a while to kind of go through the system as the market goes through that natural rebalancing process. Yeah.
And on that note about rebalancing, I think we sort of, let's sort of round this out with a one-word fire round just to tie everything together. But are PGMs in a global destocking or restocking cycle?
One
word answer.
Platinum destocking, because they've got the above ground stocks that are being run down.
Fair. What PGM is the most underrated?
Oh, wow. I don't know. Let's go for ruthenium.
We've already spoken about this, but if the Rand PGM basket price recovers peak levels, would you expect South African supply to grow?
Not meaningfully.
On aggregate, do you think the PGM industry is growing, shrinking, or stabilizing? Or another word of your choice?
I think it's broadly stabilizing, let's say.
Evolving. I like the word evolving. Is peak auto demand for ICE vehicles behind us?
Yes.
How you would describe the opportunity in PGMs?
I think very interesting.
What is the most value-add conference on the PGM circuit? One for a retail investor and two for an institutional one.
Look, I mean, we're biased. We organise Shanghai Platinum Week, so definitely that.
For retail and institutional.
Yeah, for everyone.
Great. Okay, I'll be there next year. Well, on that note, thank you so much. This was just very valuable, and I just think helps us navigate a very wild market all around.
Brilliant. Thank you.
Thank you.